Hello everyone and welcome into the channel. My name is Brent and in today's video we are going to be taking a look at the M1 Finance portfolio. We're going to be taking a look at the 1 week recap of the week and also the monthly performance, because just 1 month ago we were down at $38,538 and you can see it has quickly rebounded here within the last month. We have been a couple of videos. Our last video was just 2 weeks ago. Last weekend, I had a transit issue. I got stuck in Vegas for 12 hours. So I had a 30-hour flight back from Germany, overall transit. So I didn't make a video last weekend, but today we're going to go ahead and hit up 4 different areas. Number 1, the overall performance of the portfolio. Number 2, the weekly performance in comparison to the main indexes. How have we been, performing in comparison to the S&P 500, Dow Jones, etc. We're going to be taking a look at the activity, what dividends got paid out, what companies have we purchased in the last week, and then number 4, if our portfolio income isn't up to date, we're going to go ahead and show you guys how to track your own dividends completely for free. And also we're going to see where our portfolio currently stands. Now this portfolio, some back info, this portfolio was started back in 2018 January. So here we are 4 years and 4 years and 6 months later or so. Here we are 4.5 years later, starting at zero, adding in every single week roughly about $115.38, just enough to max it out for the year. Doesn't take too much, right? But we're going to go ahead and take a look at the performance here. Okay, so starting off at number 1, let's jump over into the M1 Finance portfolio. Now we are almost back at all-time highs. Our all-time highs in this portfolio was roughly 77.77%. This is money weighted, so money weighted returns. I believe we're roughly about the same point as far as gains, because the dividends have continued to flow in over the last 6 months. We've collected roughly $500. I remember we weren't at $3,000 of earned dividends. We crushed $3,000 of earned dividends. We're now crushing $3,500 of earned dividends. So we are well on our way to earning over $4,000 within this portfolio. So that is really, really interesting, and just it's exciting to see how this number just continues to grow and grow week after week, month after month, and it's continuing to compound faster and faster. So overall, I do think that this portfolio has done really well. There has been a time where it did dip into the negative. That was initially when we started. I don't remember if it dipped into the negative. Yes, I believe it did, because I remember it did go down to like 14,000. It went from 21,000 all the way down into the 14,000s back during the 2020. This isn't showing intraday, but I remember intraday there was a period there where it closed down below in the $14,000, and we posted over on Instagram. But we can see here the market has done extremely well since its recovery from 2020, and we're actually at all-time highs right now. This is the highest that the portfolio has been money wise in value, $44,721.17. Now our biggest returners, our biggest companies here in the portfolio are Apple, up 316%, Main Street Capital. I've seen a lot of investors buying into Main Street Capital at this point. I think it's pretty high at the moment. I'm not sure what's the price at. Let me see here. Priced at $43.70. In my portfolio, it's up roughly 128.38%, which is just insane. ABM Industries is in number 3. This is one that kind of bounces between 3rd place to 10th place. A lot of these positions here, if I look at my top 10, they've all been at one point, Realty Income down here. It looks like it's in 8th place or so. It has been at a point up in 2nd and 3rd place. Lockheed Martin, Pfizer was in 2nd and 3rd place and such. So these companies all bounce around quite a bit, up in the double digits, triple digits, and then kind of slowly bounce around. That's completely normal for companies. Our worst positions down here in this portfolio, IIPR, this one's got beat the heck up, down 45.45%. Clorox has had some signs of recovery. It was down a little bit more than it is now. It's still beat up pretty hard. Stanley Black & Decker, priced at 5, down nearly 30% as well. This one has just been kind of a bleeding thumb, bleeding something in my portfolio. But I just haven't had the I don't know what the word is to kind of sell it off. Then we have Digital Realty Trust. That's our fourth position in the negative. Overall, only down 4%. Great company in the long term. While they're down 4%, I believe it'd be fine. It's not going to go anywhere in the long term. So those are our negative positions in the portfolio. And if we take a look at before we jump into the 1 week, right? The 1 month here, our portfolio hasn't skyrocketed a ton. It's up 5.5%, which is crazy overall. But if we look at the other indexes, if we just look at the indexes themselves, the S&P 500, the NASDAQ, and the Dow Jones, I'm going to swap these, Dow Jones and NASDAQ here. Look at this. They are up double digits here. The S&P 500 in the purple up 13.02. The Dow Jones in the orange up 10.26. And the NASDAQ up 15.25%. We can see that. We'll take a look at that here in just a minute as well. But just crazy to see how everything out there has been skyrocketing. I'm actually not so happy that the market has been recovering as fast as it has. I do have some call options on my Merrill Edge portfolio that expire in December. They're priced around, I believe, $435 for the SPY, so it's very, very close, within about 4 or 5%. So I may have to just kind of buy them back, keep my shares. But I do think that we've moved so fast in the last month that I believe there should be some sort of a pullback. We don't have to pull back to all-time lows, obviously, the recent lows. I think we do have a bottom in place, so I don't think we'll retrace all the way down to, I think, SPY at 460, 470. But say if we fall down into the 400s, 410, I think that would be completely reasonable for the S&P 500. So taking a look now at the weekly. For the week, we're up 2.61%. So if you compare this to, say, the S&P 500, here we are up 3.26%. Year to date, the S&P 500 is still down roughly 10.2%. The Dow Jones here up 2.92%. So our portfolio generally sits around the S&P and the Dow Jones, but during the downturn here, we really didn't see a whole lot of losses here. We can see here we sold a couple companies, and while we were selling out of companies, the market did dip here, and then we took a lot of the equity that we had on the sidelines, we reinvested it here. We did have a little bit of during, I think, what was this, after May through July, there was a bit of a dip there in the market felt pretty good, but we have recovered very quickly since then and moved into our new all-time highs. So we haven't really fallen as fast as the market, and we're not recovering as fast just because we didn't need to. I think we're in a good place right now. So overall, we can see our best weekly performers have been Essex Property Trust. This is a REIT, ABM Industries, Siggy Selective, this is an insurance company, JP Morgan. JP Morgan's a great company. We had bought quite a bit of this one while it was down. We had started off around $400 or $500 in this position. So we have definitely moved a lot of capital into this company over the last year while it was down, beat up, right? Clorox, interesting to see this one, 5.31%. That's, I believe, our second place loser. Our worst positions this past week, Main Street Capital, it still remains second place in the portfolio overall. J&J, Cisco, Colgate. So these are all consumer defensive, except for this one, BDC. But I would say J&J, Cisco, Colgate, these are generally consumer defensive. These are companies, Johnson & Johnson, sell a lot of products that consumers would just generally buy. Colgate as well. Cisco, they deliver to many different companies. So they're always going to have some sort of business regardless if the economy is good or bad. Their businesses will continue to do as they do. So I think money's just kind of flowing from some of the safer companies into some more of the risk on companies. So financials, IIPR, interesting to see this one kind of bouncing back a little bit as well. So that is the weekly performance. That would be our number 2. Jumping into number 3, what the heck has paid out dividends? Now, we haven't made any video in the last 2 weeks. That would put us back on the 1st of August. So as of the 1st of August, we have made 3 buys here. We've invested $758.51. We purchased DLR. Again, this was one it's down 4% right now in our portfolio overall. So I think it was probably down back then as well, and it just kind of floated in the negative. But we added into it JP Morgan. We bumped that position up to 2,000. by adding $300, and Siggy Selective Insurance Company with raising rates. That's always going to be beneficial for insurance groups. So we added capital to this one as well. So those are our 3 buys here within the last 2 weeks. We also had Lowe's pay out a dividend. So let me go ahead and pull up my calculator here. We had Lowe's paying out $8, and if I can just write my calculator correctly, $8.84. We had Apple paying out that whopping $3.90 there. We had Clorox paying out $13.38 for a grand total of dividends over the last 2 weeks of $26.12. So not a whole lot, but it's dividends, right? And it's all going to be reinvested. Now jumping over into number 4, what is our portfolio currently paying in dividends? Now I don't think I've updated this since the last week where I bought a little bit of companies here. So our value is $44,721. So yeah, there's a little bit of something a little bit off right there. So I did buy, what was it, DLR. Let's go look at DLR. 15 shares of that one. So yeah, this one has the incorrect share count. So we actually have 15,41323 shares, and our average price is $138.81. $138.81. So we actually lowered our cost basis right there. So let's see if that puts us on the button. 44,122. Nope, we're still off a little bit. So the next one that we purchased was JP Morgan. So JP Morgan right here is 16.38205 shares at 118.43. So 118.43. We can click here, 118.43. We did lower our cost basis on JP Morgan, 118.43, and our share count increased to 16 from 13 shares. And then there was one other company. What was the other company? It was JP Morgan, DLR, and Siggy Selective. I believe it was the insurance company right here. So 25.51927, and 74.79 is the, yeah, right here, Siggy right here. Let me see if I actually selected correctly. Our shares went from 22 to 25, and our cost basis went from 74.50 to 74.79. 74.79. So we must have increased our cost basis on Siggy. So that should put our portfolio correctly now here. 44,721. 44,721. Okay, the M1 Finance portfolio is now synced up with the trackyourdividends.com site. We can see here, I didn't see what it was before, but we are now at $1,244 of annual income. Our portfolio yield at 2.78, our yield on cost of 3.19%. So I will have to look at, where we were at and where we're at right now, because I did add roughly, I believe, like $800 of equity within the last. I bought $758 right there, and then another $155 right there. So that's $900 and change that I invested within the last 2 weeks, and that was when the market was kind of still beat up. Okay, and that is number 4. We went over our portfolio's dividend income. So overall, I'm really happy with the performance of this portfolio. It continues to generate really, really good dividends on a weekly, monthly basis. That's all being reinvested back into the portfolio. If I'm taking a look at my other portfolios, they've done exceedingly well. The M1 Finance portfolio is near all-time highs once again. The Merrill Edge portfolio, my taxable account, that one is already break even and higher versus where it was at the start of the year, so I'm already net positive in that one. I do have some call options that expire in December that are targeted around 435 on the SPY. Right now, I would love for the SPY to kind of pull back 5-10%. I don't think it needs to be pushing itself 5-10% higher into the rest of the year. I think there should be some recovery of at least 5 to 10% by the end of the year, but I don't believe it should all come right now. At this moment, a lot of the companies here going into the second half of 2022 lowered their guidance. So I think all these earnings right now, they're all coming in better than expected just because of the lowered guidance. So I think that's kind of helping. Also, Powell, the Fed's not going to be raising rates as much anymore here in 2022. I think everything is supposed to be where it's supposed to be, right? So I don't know what's going to happen. I would love for the market to pull back 5 or 10%, and then by the very end of the year be around 440, 445. But to have it, it's at 420 right now, so it would need about 4 to 8% gain to be back where I believe the target will be for the year. But that is going to be it for this video. Let me know down in the comment section below, what do you guys think the market's going to be doing this year? Do you think the market will fall back down to the 470s, 480s for the SPY? Wait, no. 380s, right? I think, yeah, 380s, 370s, 380s on the SPY, S&P 500. That's the majority of the one I track. I have the majority of my shares are monitoring and invested in the S&P 500 SPY. So I don't, outside of this portfolio, I really don't buy a whole lot of individual companies very often. I have been mainly focused on buying SPY or VTI or VU or something along the lines. If I can consolidate all my portfolios down into just one company or one ETF, it would be the S&P 500 SPY, because I think that one has the best just buy and hold, buy more, and you really don't have to worry about these onesie twosies in the company. That's why I don't put out a lot of videos as often going over, hey, these are the 3 companies to buy or the 3 companies to watch for, just because I don't buy a whole lot of individual companies anymore outside of the ones that are in this portfolio. I think if you are just getting started in the market, just buy the S&P 500, just buy VU, VTI, and then once you've built up enough equity in there to transition over to SPY, where you have more opportunity for options, then I think that's a great route. So that is going to be it for this video. Let me know down in the comment section again, what do you guys think of the remaining portion of this year? Do you think it'll be positive? Do you think it'll be negative? Where do you think we'll land here in the future? And of course, if you guys are looking to buy anything in the market, let me know down in the comment section below. I don't know what I'm going to be purchasing here in the future. I just kind of look for opportunity, and that's where I kind of just throw my money at it. It's like a dartboard. I don't really know where it's going to land until it actually lands. So that is going to be it from me, you guys. I appreciate everyone tuning into the video. If you made it all the way to the end, say, hey, I made it all the way to the end in the comments and drop some emoji. And that is it. Thank you all. Bye-bye.